Moving beyond that, if you like, into how heat and power are actually delivered, there's a huge opportunity to change the more physical infrastructure about how heat and power are provided. There's been a huge, if you like, one of the big barriers to change is, well, management time in an organisation and availability of capital. And those two barriers are very big reasons why organisations don't change much more quickly. People in an organisation have always got an agenda to deliver on a very constrained budget, and actually access to capital is a huge problem. So one common theme, if you like, in the commercial world is outsourcing. All the time, it's outsourcing activities, and you can outsource meeting the climate change agenda just as you can outsource meeting any other agenda that you might have. And in a sense, that's what a lot of what Susenco is looking to do. There are other organisations doing it as well, and some of them much larger than we are. People like Mighty, Susenco, and Skanska, who's got a new partnership with Arab. With 5 billion, 6 billion, 10 billion pounds a year turnover, so that it's a growing marketplace. But one of the really interesting things about it, which I'll go through to explore in the following few slides, is that actually one of the easy things to do is low carbon energy generation. Relatively easy things to do. One of the really hard things to do is energy efficiency. In terms of off-balance sheet finance, and the reason for that is securing debt on that asset. If you're a provider, if you wanted to put a wind turbine up at the Open University, and I gather it's in a valley, so it's probably not the best place to put it, you can throw a ring around that asset. Legally speaking, you can give a third party a lease over that space and access to that space, and that's theirs. And if it all goes wrong, the bank can either come in and take over that as a going concern, which is the most likely way forward, or in extremis, they can come in and take the asset away. If you've got an energy efficiency solution, they'd have to come in and take out the lights and the air conditioning ducts and maybe the windows, and the asset is so distributed legally, it's very difficult to give somebody a lease or access to come and recover those assets if it all goes wrong. And that's one of the barriers that we need to think about if we want an energy efficiency energy services market to take off. It's a real challenge to actually finance it. So that's the headline issue. I'll just go through in a little bit more detail. In terms of the energy generation market, there have to date been really, if you like, three or four main themes around an energy services company coming in and financing an asset off balance sheet. The first was in the 1990s, particularly the late 1990s, with the combined heat and power market, where the large suppliers saw that as a great way of securing a long-term contract, where up to that point energy companies could change supplier at a year's notice, but if you could sign ICI up to a 15-year contract, that was great. So they went and put combined heat and power in on those sites in a way which is much more efficient than separate delivery of gas and electricity from the network. That all came to a shuddering halt, and that's a separate issue really in terms of how the government restructured the electricity market. One of the big issues at the moment is actually wind on industrial sites. If you can put turbines in an industrial landscape where there are already significant visual vertical elements in that landscape, you can't even see the wind turbines. It's not a precious landscape anymore, and that's part of the attraction for putting wind on industrial sites. This is one of our sites. That's the photo montage. It looks like it was real, but it's not quite yet. These are two turbines in East Anglia next to Princess Foods factory, where the turbines will provide 2/3 of the power that the Princess Foods use in any given year. This is one of the sites that we did on a consultancy basis rather than a development basis. This is McCain's near Peterborough there, where they have 3 turbines, plus actually they have a 1 megawatt anaerobic digestion plant where they're taking the waste products from chip production digesting them to produce a gas to burn in to produce heat and power. It's a market about to happen, the AD market, and that's something that we're very interested in. Large-scale PV was something that was happening this summer until government changed the rules because it was going to cost them too much money, and they reviewed the feed-in tariffs. I think that's a market that will kick off much more gradually from 2015, maybe 2017 onwards, but I'll come to that more in a minute. In terms of wind, the sort of scale that we're talking about, turbines have changed a lot over the last 20 years or so, 20, 30 years. And now we're talking about machines that maybe have a 90-metre rotor on them and maybe 120 metres overall. And I wouldn't really regard a vertical axis machine as a serious economic investment. It's much more of a wind sculpture. I just wanted to give you a sense of sort of what sort of investments we were talking about. In terms of PV, there's a huge opportunity in terms of roof-mounted large retail sheds, large factories and so on, could cover themselves in PV. As I say, it has been hit by the feed-in tariff review over the summer, but I think that over a period of time that the PV market will grow much more gradually, and then by 2030 or so, with the decline in PV prices, the decline in kit prices that people are projecting, and the increase in energy prices that we're also expecting, PV has the potential to deliver a similar order of magnitude of power as the nuclear industry currently does. So I think it's a huge market, huge opportunity. So that's the on-site power opportunities, and it's a market that we're very actively engaged in, both on a consultancy basis and in terms of developing projects where we will own and operate them, and they're off balance sheet of the utility. So that's saving them cash or equity that they can now invest in their core business. It's also saving them management time, because we take on all the hassle of the development through planning, financing and project delivery and so on. So it's off balance sheet delivery of those assets.